Amazing. Good to connect with you once again. Welcome to Weekly Review with Coach Shedrach. As usual, we look into the market of gold, we look into the market of EURUSD, and we look into the market of EURJPY. So the goal for every weekly review is to give us the insight of the market. Where is it the market is coming from? Where is it the market is at? And where is it the market is going to? It is from the previous data, we're able to make projection for the future data. So real quick, let's look into, first, we're going to review what we did last week, and then we're going to see how the trade played out with respect to the analysis we made last week, and then we'll now look into what we're expecting for this week. So last week, I said that last week, while the price was around the 2018.76 price level, I was saying that we expect for this market to either come here and retest this zone, or if it breaks this zone, then we're expecting it to come and retest this zone. And then I also said that this is at the 4-hour time frame. I'm making this at this very moment is at the 4-hour time frame. But I also said something like, or this market from here, it could just come to this zone here and then retest it. Then when it retests it here, the next move we're expecting for the market to do is to come to this zone or to come to this zone, right? So now what later happened last week was that a news played out. The effect of the news caused that the bears took the market, broke the zone. In fact, it came and broke the 2004.61 price level. And this was the level that later held the price. And if you look at this level, it coincides with the zone here, right? So that was what happened. The thing again is that we don't move the market, we don't move price, we don't move the market as day traders, as retail traders, we don't move the market, whether it's swinger, whatever, we don't move the market. We react based on the action of the market. That's why you don't trade against the trend. If you are trading against the trend, know that you are trading at a very minimum you are trading at a very minimum risk, because I always said, follow the trend until it bends. So haven't seen all of this. What do we expect for this market what do we expect for this market to do this week? So we're going to do a new charting, take off some of the previous thing we have here so we can have a clean chart, okay, so these are the 4 hours time frame. We could have something like this. So this week started here. Because this is the ultimate high of the week. So this is what I'm seeing from the market right now. It seems to, two things are happening here. It could be that this is a fake out, because it has been following this trend. This trend has been following this trend. First, it came here. Structure has not broken yet. Structure has not broken. That's why I didn't even go to say that let's look at the structure. So we're still bearish. We're still bearish from a macro perspective. We're still bearish, right? So any action we're going to be taking now, majorly is going to be on sell. So this could be a fake out, because this particular lower high has not yet been taken out. So this could be a fake out with respect to this particular trend line. So if this is a fake out, we're expecting for this market to come and retouch this place. So it is at this point we'll go to the 1 hour time frame, so this is what is happening here right now. So I expect for this guy to retouch this place and we'll sell it downward. And we sell it ultimately. So this will be our first TP, and then this will be our second TP. All right. So we use our short position. Risk small. That's not my risking big. So 40, put it at 40. Or 39 is okay. And let's increase the B2, give it a breathing space. Give it some breathing space, give it some breathing space. let's give it some breathing space. So 46 is okay. You know that your lot size, your SL determines your SL determines your lot size. You know, from if you be my student, you should understand what I'm trying to say. So our first TP could be here, and our second TP will be here. So you just take note of this as we look at the market of gold. So this is what we're expecting to see from the market of gold. First TP will be here. So first TP will be at 1997.93. That's 1997.93 price level. And the second TP will be at 1987.25 price level, which is at 326 pips. 1 to 7 risk to reward ratio. So this is what we're expecting to see. But before we take a sell from here, of course, wait for a confirmation pattern, wait for a confirmation entry pattern, candlestick pattern. You know, if it comes to retouch this, that's giving us an M pattern already. And if it gives us, so we'll now wait for the candlestick pattern that will give us a confirmation that the sell volume is strong, right? But even at that, don't still over leverage. Know that market will always play out what it wants to play out. So real quick, let's go to the market of euro. So let's first go to EURUSD before we come to EURJPY. And so I'm going to make a quick review of what we did last week. So last week we said that, last week I said, so let me come out to the 4 hours time frame. 1 hour time frame. So this is at 1 hour time frame. Last week I said that when I was analyzing the market last week, the price was around this level. Market was around this level. When I was analyzing the market last week, so you have to go back and review the class for last week. Just watch the class for last week and understand what I'm trying to say. Connect the dot of last week and what I'm saying now so that you can be able to understand this particular review I'm trying to do. So last week I said that the market was around this price level, was around here. So I said that we expect for market to come and touch this place, to come and touch this guy. And if this happened, we expect for it to, I remember I said it to come here, give us, we expect it to come and touch, then we'll take it all the way to this place. And I also put in my short position at this price level here, you know, risking 13 pips, still could remember, for listed here at this psychological level for 100 loss pips, that's 106 profit pips. So this was what happened that last week. So because of the news, you know, the market came here, it actually did retouch this trend line, you know, it came, but it couldn't trigger our buy, it couldn't trigger our sell, couldn't get to the targeted position where we expect to short the market. So at this price level, you know, immediately it touched this zone, it touched this guy, this trend line, boom, it went down all the way to our TP without activating our sell, you know. So we couldn't take the market from there. But within the week, of course, as day traders, I was able to show those who are on the Telegram group what to do. I showed them, okay, this is what the market is doing currently. I think we took this buy here, took the buy at this level. So let me take off this guy because we couldn't execute the position. Took this buy here, took the buy around this price level. It was around 50 pips, right? No, it was 50 pips profit. Just 50 pips profit because of this particular guy here. So we knew that there was a strong support here. There was a strong resistance here, with support level here, and we expect that market is going to react here. So just put it here, and our stop loss was around 15 there, yeah, 15 pips. So we're able to catch out this particular bar, but we couldn't get the sell because the market couldn't get to our position. So that's why it is very important that when you set up your market, when you set up your analysis, can take you hours to put up or some minutes, you know, based on what is it you are seeing in the market. It will take you some minutes, you know, some hours, some minutes to analyze the market, and then hours to keep waiting and waiting for the market to trigger your buy or to trigger your sell, only to realize that market couldn't get to your position before moving to the direction at which you expect for it to move to. Now, what do? Does it mean that the market is, does it mean that you're going to run after the trade? That is where discipline now comes in the life of a trader. It's not about what you earn from the market, because you have abundance of opportunity to keep earning from the market or to even keep losing, So it is more about how you allow the market to align with your strategy, with your confidence before taking a position in the market. It is key, and it is very, very important. Very, very important, because any day you compromise your strategy, you compromise your trading plan, even if you win, that should scare you, because you're already putting yourself in a position of compromise, because you will definitely compromise the next time. If you compromise to win, you will set up a standard in your mind already that it is possible to still compromise the next time and still win. That's where the danger comes in, So let's check the market as to what do we expect for this week to happen. Let me clear up some things here, and we go right ahead into what we expect for the market to do for us this week. All right, so let's go to the 4 hours time frame and see the market structure for the week. Coming to the 1 hour time frame, what are we expecting to, what are we seeing from the market? We see this guy here, right? A very good supply zone there. Now let's take out this guy. There's no way to function. So this is what we're seeing. And then this is also what we're seeing. Even though there's no point for this, so long as this is already there. But for the sake of clarity, this can be there. All right, so from here, you notice that this, as I was saying, this structure is not yet broken, because here we have a high here, we have a high here, we have a low, we have a lower high here, we have a lower low here, we have a lower high here again, and we have a lower low here. Though it couldn't come and give us a new lower high here at the point of, or at the spot of the trend line. But that also does not mean that the structure is changed. This could probably be a fake out in a higher time frame, so the daily time frame, for instance. It could just be a fake out, but it also could mean something different. So let's come back to our 1 hour time frame. Let's come back to our 1 hour time frame. So we're going to plot our trend line here. So we have a touch here, we have a touch here, a high, we have a low, a higher high, a higher low. So we couldn't have, this could also be a higher low, a higher high, because it took away this higher high here. And then we have a higher low here, or this particular high did not take away this particular higher high. So we can't say that it's a higher high. But then we now realize that the market is coming, is becoming bearish already. The bears are already taking over from this particular space already. So this could also tell us that the sell is still valid, because we're just trying to confirm whether the sell is still valid, or the bulls have taken over the market, because we are seeing that, because someone also might be seeing that this is a break of the trend line and it come to retest it here. So we have a break of the trend line here, come to retest it here, so that it can give us a bullish move. But at the same time, we can't still capitalize on that, because this particular lower high is not yet taken away. So we're still holding on to that. So let's project it. If we are saying that this sell is still valid, where we're expecting the market to sell to, that's where we now zoom in to the higher time frame. Let's go even to the daily time frame. What do we expect for this market to move to this week? Ultimately, if this market continues selling, we're expecting for it to sell all the way to this place. But since we're taking on a weekly basis, the next spot I'm seeing here is this guy here. The next spot I'm seeing here, I'm seeing a strong zone here. So the market should be giving us this move to this place. So come back to our 4 hours time frame. So let me still go back in time and see whether and make the necessary adjustment possible. So come back to the 1 hour time frame. Come back to the 1 hour time frame. This is what we have, and this is what we're expecting for the market to do. So here, ultimately, I'm expecting this market to continue this sell. This is my bias for the week. I'm expecting for the market to continue this sell. So if one is selling, you can even place yourself from here already. So this is where I'm expecting for this market to move to. So we're risking 30 pips for 93 pips. 30 pips for 93 pips. This is fair enough. 30 pips for 93 pips. Or you might also want to put your first TP here. First, which is the 2.09 risk reward ratio. Then you also want to take your second TP here, because probably the market will want to come and retest this place and then continue the buy, So that's that for euro. Now this entry is on the 1 hour. Take note of that. This entry is on the 1 hour. Take note of that. So let's go to EURJPY. What is EURJPY telling us? What's this guy telling us? So it comes to the 4 hours time frame first. So this was the trade we picked last week, So last week I made a projection and it played out. It couldn't get to that level, if I'm not mistaken, couldn't get to that level. So, but because of those on the Telegram group, I think I updated those on the Telegram group as at when I took this particular trade. So this, I took 2 trades last week, this and Euro, I took GBP USD actually. For those on the group, I give them Euro USD, which is the same pattern, the same move, everything, All right, so this is what we're expecting for the week. So last week, we expected that the market will come and retest this zone. It couldn't happen. We expect for this market to come all the way and retest this and couldn't happen. So we still waited patiently. It broke this zone. I said that if it comes to retest it here, we're going to ride it. We retested it and we rolled it all the way to this place. We risk 31 pips for 72 pips, which is good enough. Good enough. All right, so let's look at the market for the week. Ultimately, we said that we're expecting for this guy to move to this place. We'll keep cutting it week by week, week by week. We expect for this market to get to this place. That is the 164 price level. And that's because of the zone here. Because of the zone here. I think I also need to plot this zone because it's also, it looks pretty interesting. So that's that about that for now. So let's look at where is this market, where we're expecting this market to go to. Currently, we see that the market is trying to give us a double top. The market is trying to give us a double top here, which could mean that our structure is not yet broken, structure is still valid, still a bullish market, structure is not yet broken. So we're only just going to wait for the perfect place to take the buy. It is still a bullish market. So we're still waiting for the perfect place to take the buy. If this market, this particular trend, I don't think this trend is still valid. Except if we go to the 1 hour time frame. But this guy, I remove it from here. I can, we already have a good support area here, a good zone here. So this is what I'm seeing. This is what I'm expecting the market to do. Let me remove this guy. It is done with work here. If this market comes to, so let's move to the 1 hour time frame. It is somewhat consolidating right now. But if this market should bounce to this place, the moment it gets to this price level, I'm riding it. Sorry. The moment it gets to this price level, the moment it gets to this particular price level, I'm riding it. So this week, are you sure this guy is not too high? Okay. So I'm just trying to see the previous pattern so that you can see if, okay, I'm also seeing another support area here, another resistance level there rather. All right, so I'm just trying to look at, because since it's just on a weekly basis, we don't over we don't become too greedy, you know, we don't become too greedy. So here um, here is good enough. So here and here is good enough. Risking 26 pips for 119 pips on Euro GPY. So let's watch out for this here. If this happens, this is what we're going to be doing. If this happens, this is what we're going to be doing. So just take a look and keep a watch. And I think we're good. We're good for this week. So remember the market for gold. If you pick either one or two, you are good. You don't need to pick all the three, except that the market will played out within the week. If they do not play out, or if the three market do not played out within the week, you don't need to force yourself into the market. You know, I know that among the three, one should definitely play out. Then you can just write that one, capitalize on that, and you're done for the week. And please remember to subscribe to this channel. Every week I drop a weekly analysis, you know, and then from time I'll keep giving, I'll try as much as possible to be giving us tips on how to navigate through the market. But remember to subscribe to this channel, like this video, and share it to as many as possible. Thank you, and I'll see you next week. Bye for now. Don't forget, subscribe.